have the deep pockets, you're not the controlling shareholder, you're not everything. I mean,
Right. So there's really two kinds of deals. One where third party comes in and makes an offer for the existing.
you wrote a corporate raider's guide to privatization. I mean, like, when I read it, it gave me a lot of feelings in the sense that you see privatizations all the time, but it always seems that the minorities don't have like a good deal. Is that why you wrote it for this week? You wrote a guide, so to speak?
So last year we saw quite a number of privatizations and quite a number of at least general offers that went out. And what you realize is that from most of the independent advisors' advice, they found that the deals were mostly not fair to minorities. But the minorities were advised to accept the deal because they didn't really have much choice.
Okay. And that's what triggered you to sort of write this?
Yeah, and I mean, we're looking at an ongoing case now with Hovid, right?
Yeah.
And what you're seeing is that the offerers are tweaking the deal so that they can take as much shares as possible at this price, you know. And their ultimate intention, of course, is to privatize the company. And minorities, on the other hand, don't really have real options to consider. They either sell in the market at, you know, this price, or they take this offer, which is about the same price.
But it's not the same for everything. I mean, like some deals, like for example, the Old Town one seemed quite fair. They gave quite a good premium, but are minorities always on the losing end mostly because you don't have the deep pockets, you're not the controlling shareholder, you're not everything? I mean, is that a fair statement to say?
Right, so there's really two kinds of deals. One where third party comes in and makes an offer for the existing controlling shareholders, you know, and that tends to be a fair deal because they have to convince the existing shareholders, the controlling shareholders, to sell out, you know. So that tends to give a pretty decent valuation on the company. I think we saw one other deal like that last year, which was Century Bond.
Yeah.
And I suppose one that is sort of ongoing, which is the Goldis privatization of IGB Corp, which is quite fair. But other than that, all the other privatizations, I think there was about 15 in total, you know. There wasn't really a reasonable offer put on the table for the minorities.
You pointed one out in particular, which was Wing Tai, and I only knew about the fringes of what was happening. I knew the privatization had like some issues, especially with valuations. But when you actually put it in black and white, the minorities only walked away with half of what it's worth. I mean, like in that case, they didn't do anything wrong, right? The Wing Tai guys.
I mean, as any investor, you want to pay as low a price as possible, right? And you can't fault the Wing Tai controlling shareholders for offering the lowest price possible to take the company private, right? But from the minorities' point of view, definitely it's going to feel like you got a raw deal. You know, Wing Tai managed to pay only half of the value of the company, you know, as determined by the independent advisors, and that certainly seems like a good deal for them. And as a minority, you did get a little bit of a premium, but if you've been holding the shares for a long time, you're going to be quite disappointed with the outcome.
So what can minorities do then? Because they will never have the deep pockets, right? I mean, like, will they eternally be stuck getting the bum end of the deal? I mean, what can you do as a minority when you look into a company and say like, okay, I think this has value or whatever, but I'm going to get something out of it?
As a minority shareholder, you only really have to rely on the market to sort of price the company well. And if you're going to a company that's not priced well to start with, potentially that's where the problem starts. But the question is, can you then hope that this company gets valued well as opposed to getting privatized at this kind of a mispricing, right? So you should be really aware when you go into a company that what is its potential to be revalued properly in the open market, and therefore helping you get a good upside on your investment.
All right. And then has there been cases where minorities have won, or is there no win? Because let's say you do point this out, even if you do block the privatization, the controlling shareholder will just make the stocks just illiquid. They'll just buy, just keep buying, or they'll do nothing with it. Is that?
Yeah. So there's really two thresholds, right? The first being the 51% mark. Once a controlling shareholder crosses the 51%, 50 plus 1 mark, he pretty much blocks any other competing offers. No one else is going to try and pay a better price for the company. And the next one is when it starts to get around the 75% mark, and they start to pass the minimum public shareholding spread, At that point, they're just going to wait it out until Bursa says, all right, we'll suspend the trading in the shares because you can't meet the public shareholding spread, and they'll just slowly creep and collect shares, and eventually you're stuck in a company that you have no choice but to sell out.
So the moral of the story is caveat emptor?
Well, just go in with your eyes open when you're buying these companies that look really cheap, because there's probably a reason why they are undervalued.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.